Hey, it's James here, and this is going to be a short one. In this video, I'm going to talk about Stretch, which is Strategy's instrument, if you will, for raising funds to buy Bitcoin, or one of their instruments. Stretch has been promoted by many different people as being a safe way to earn yield. It's been promoted by many gurus on social media as being better than bonds and better than money markets and better than all these alternatives. But the reality is high yield investments tend to be high risk investments. And this should be approached the same way that all high yield investments are, with a degree of skepticism. This is supposed to trade around $100. And if it trades around $100 and offers 11.5% yield, then you will earn about $11.50 per year per share. Unfortunately, for people that bought into that narrative and actually paid $100 for this particular stock, it is currently trading at $92.79 in aftermarket trading, and it closed today at $91.79. Let's give them the benefit of the doubt and say $92.79. That is a drop of roughly, we'll call it 7 to 7.25%. So if you bought this at $100 in April, in the last 2 months, you've earned roughly 2%, a little under 2%. And meanwhile, you're down 7% on the stock. So if my math checks out, you're in the red. So let me show you what a safer investment actually looks like. This is an ETF called SGOV. It's basically holding short-term treasuries. And SGOV is also supposed to trade around $100. And every month, what you'll notice is it climbs up as the interest builds. The dividend gets paid. It drops back down. It climbs up. The dividend gets paid. It climbs up. And it does this every month. Consistently, every month, it climbs up, pays the dividend, climbs up, and always trades around $100. In fact, if you put this on a monthly chart and we put it on a line chart, here's what you're going to see. This is $100 right here. This at the very peak is $100.75. And that goes back roughly 6 years. This is what a safe fixed income instrument is supposed to look like. It is not supposed to look like this. And for Bitcoin lovers, what I've been saying all along is that this could be the catalyst that actually sends Bitcoin lower. Every bear market tends to have a capitulation event. For example, in 2013, Mt. Gox happened. In 2017, the capitulation event was actually the CME launching futures, and people suddenly had the ability to short Bitcoin, or short futures at least. In 2020, we had COVID that caused a capitulation event. In the 2022 market, we had the FTX collapse that caused capitulation. I believe there is a fair likelihood, I'm not going to say a high likelihood, that Stretch will be one of the catalysts for a capitulation event during this Bitcoin bear market. If you want to invest in that, that's your business. It's not mine. It's your money to do what you want with. But if you're going to invest, you should understand the assets you're investing in, because this has been promoted as safe. This has been promoted as a fixed income. And there have been more than a few gurus or furus on social media basically acting like you're a moron if you're in any other fixed income instrument getting 3, 4, 5% when this is paying over 11. But the difference is those other instruments are often safe and actually backed up by the government, whereas this is a hope and a prayer that you're going to get what you promised. If you enjoyed data-driven content, make sure to stop, give the video a thumbs up, subscribe to the channel, and perhaps share the video with a friend who needs a dose of reality. Remember, I am some guy sitting in a spare bedroom, and that means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor before making any type of investment in cryptocurrency, the stock market, precious metals, forex, or any other tradable asset. Thanks for watching. Truly appreciate it. As always, please remember to invest and trade safely.